Here for another video. Looks like there's some huge things according to. Whoops. Let me just turn down the volume real fast for you guys. How's it going, you guys? Brenton here for another live stream. So I'm really excited to be on today, you guys. We have some crazy things that are happening in the market. Okay, we have Bitcoin obviously thriving. We have the gold. We can see the dollars finally taking a turn for the downfall. Looks like it's going to definitely be seeing a downfall for the next couple of weeks. We see that treasury bonds are definitely showing that double bottom, where we have that we have the M formation with consolidation at the high, moving average crossover at the 200 EMA, where then we can see that the downfall is still continuing. So at this time, you guys, we're still going to be looking for a downfall for the dollar. As you can see, I made an analysis earlier. This is just my prediction of what I believe the market will basically do when this analysis comes into fruition. We can see that the angular resistance we hit 3 times here, and then not just that, you guys, we see 3 hits to the trend line or 3 hits to the angular resistance, which means it's usually a trend, right? So we want to retest and validate that double bottom. So that double bottom is at a 2.5 treasury bond. Okay, so as we know that treasury bonds are integrated with the dollar's strength, right? The dollar's strength has to do with integration with also the companies, because companies are obviously putting a lot of money into the society, right? Economically, we need a lot of bigger corporations because that's where a lot of the jobs are, right? So as we know that the correlation between interest rates and treasury bonds, and how we know that if we're not being able to stabilize a big factor of quantity, we're going to obviously have a lower value, which lower value means sales, just sales in general are going to go down. Home sales, we see GDP go down, we see all these other elements in the market. We start to have a counter effect based off the psychological aspect of not having enough, right? Because basically when people need to strive or need to survive, they need to cut ends that are not sustainable or not able to provide anymore, right? Just like when people are going on budgets, they cut off, eating out, or, if people are, trying to lose weight, they're cutting out all the carbs and so forth, right? Same factor comes in with the market. We see the treasury bonds go down. That means we're going to also see the government. We're going to see also a lot of companies, right? Another thing is that if we do see this coming into fruition, we're going to see an interest spike, right? Interest spikes means that means just too much inflation. Interest spikes are going to happen to level out that inflation. So what basically this is, you guys, is a correction in the market, right? This is one of the best times to be in the market. February through June, right, is a big correlation on market likes to drive on one direction, okay? So we saw that in 2018, but we're going to see it more so in 2019 because we also have that $1 trillion deficit that we've been establishing since 2012, where we're in an artificial stimulation process. This artificial stimulation process is not going to be able to validate, right, anymore. And that's going to be a huge effect on market price in general. So let me just make sure that I got you guys out over here on the OBS system. Whoops. Make sure I have everything. Whoops. Alrighty. Sorry, guys. I had a mix up. So anyway, long story short, you guys, so going back into it. So when we have these integration processes, we want to see counter effects, right? These counter effects are going to be different things to look into when the dollar is shorting, right? We're going to look into gold. We're going to look into the euro. We're going to look at the Great Britain pound. If you already go into price, I mean, if you guys were to take some of the signals we had previously last week, I did some signals for Forex, and I had the US dollar, I had Great Britain pound long, right? I even had a huge position on gold. We had that gold trade, right? That long position on gold, right? The entry in that target was 1375, and if we look at price right now, you guys, it's already still going up, right? So if we were to even took half of that trade, we got in at 1308, right? 1308, and we even broke out to that high. You guys would have been able to make a lot of money, right? So we're definitely helping you guys on providing the most accurate signals possible while we're trading with you guys and keeping this a very, very sustainable, and not just that, a prosperous journey for all of us, right? So we can see that this moving average crossover was a huge stabilization, which means that, ever since Nixon took gold off took it off the gold standard, right, we are essentially just having a Ponzi scheme relevant currency, right? All this is that they're printing more currency to pay back debt or pay back other people that have what? Treasury bonds, right? Because treasury bonds are a semblant of a secured debt or just a secured rate of interest, right? 1 to 2%. And that's why we know that the level right now is at 2.6%, right? If you were to put money in, you're supposedly automatically going to get this money back, right? So this is where a lot of banks and institutions put their money in, because at the end of the day, like you need a lot of capital to be able to get into this investment wheel, right? Warren Buffett has a 10 allocation, 90% index and 10% treasury bonds, right? But he has billions of dollars, you guys, billions of dollars. So this is the way that he's able to quantify his wealth and his wealth portfolio. But even now, you guys, going into 2019, we are definitely heading into essentially a recession. And it's not a recession where everybody's going to be like, you know, even in 2008, you know, a lot of people weren't even affected, you know, like a lot of people, I know that a lot of entrepreneurs were affected, a lot of people that had, you know, day-to-day jobs were, but like people that were obviously poor and people were rich, they didn't really get affected at all, right? It's just the middle class that gets hit the most in these cycles, right? These financial cycles. So when we see these financial cycles happen, hey guys, how's it going? What moving averages do you use? This same for all of them? Yes. So I'm gonna answer you guys this question. So good to see you guys. I'm glad to see you guys on the live stream. So yes, the moving averages I use are the 200 moving average, the EMA, exponential moving average. I use the 50, the 200 EMA, and you can also use the 30 or the 50 if that works for you, right? And I also use an 800 moving average. The reason why I use an 800 moving average, you guys, it's when the market essentially is turning completely. Like the 800 moving average, when it hits that 800 moving average, it's like once every like 5-6 years. So that's how determining that moving average is. So like if I were to show you guys, I don't have the 800 moving average up here right now, but I can show you guys what exactly I mean by that. So let me just knock it out. So we have the third leg, right? We can put the third leg at 800 moving average. Okay, so this is the 800 moving average. So you see that 800 moving average, you guys, how it's super. It barely tests, right? You rarely see this market test. When's the last time it tested, you guys? 2017, that was 2 years ago, right? And then before that, it was obviously hovering. Before that, though, it was 2015, right? So it's like a 2-year interval, right? The market, the 800 moving average essentially hits and touches every 2 years. It's like the 2-year section. So that's why when I see this, the structure, I'm looking for the treasury bonds to go lower, right? We can see this is a symmetrical pennant, or we can see this a descending triangle, right? Building up that liquidity, that trapping, right? Before we shoot price down even more. Which this means, you guys, is that it's going to be a shift in market price. Shift in market price means that people, outside investors, right? Bitcoin is a huge investment wheel, right? So what we're seeing now is that dollar's going short, right? The dollar is trending down. So what is investors going to do, right? They're going to allocate their funds into something that is going to be sustainable, right? Bitcoin has definitely been a drop for a while, right? But that was just to build enough fear, right, into the stigma of the people, right? Psychology is a huge determining factor on market play, right? So market play has to do with these psychological structures, right? That's why we call bull traps and bear traps, okay? So if we're to go into this, so, hey, Justin, good to see you too. So when we see that these essentially, this is what it was, right? So I'm going to go back into in 2017, and I'm going to show you guys these 2-year cycles and how it works, okay? So essentially what happens is that we get into the market, right? We have basically the media attention, a bunch of people selling their houses or putting mortgaging out their house and doing all sorts of stuff, right? Just to get this get rich ideology in their mind, right? That they're going to get rich overnight, that they're not going to have to work their day job anymore without ever researching or studying, right? People are just trying to look for handouts, and not essentially that. They're trying to look for a really easy way to get rich, right? But there's no really easy way to get rich, right? There's smart ways, there's execution, but essentially there's no easy way. Easiness is not essentially the way that we're going to do that, right? It's not the way that we want it to happen, right? Easy doesn't mean it's going to be self-gratificating, right? Self-gratification, right? So when we're talking about this, we want to make sure that price, right? So this is what happened. So price pushed to the upside, right? We had that, obviously, that new paradigm shift. So that new paradigm basically saying market highs. So I'm just going to map out a couple things, you guys, for you, and then we're just going to go straight into, and the reason why I'm going back into this, because I'm going to show you guys how this works right now on price right now, okay? New paradigm. Oops, spelled paradigm wrong. So new paradigm, okay? So new paradigm, market price high. So what this means is that when price is moving into the highs, essentially what is going to happen is that a lot of people are going to be trapped in this area, right? So many people bought at this area at highs, right? We as investors know that you don't want to be the first one to get in something, and you don't want to be the last one to get in something, right? You want to be the person that gets in the middle. The middle is like right here, right? A lot of people said they bought, they saw their their Coinbase and their blockchain portfolio, and they're like, yeah, I bought at 10,000 or 4,000, and they thought that they're investors now. They're super stoked, which is cool, Obviously, it's a good way to get into it. I got into it that way, so or not through that way, but binary options. But what happens to you guys is that when there's a new paradigm, they're going to trap you. They're going to shoot price down, right? And they're going to make a flag pattern. All these orders are going to be filled, right? They're going to trap price, and they're going to scoop price up once again just to induce you. What this is called a bull trap, okay? A bull trap is theoretically just trying to induce this disaster phase, right? This disaster phase in our correlation to our subconscious mind, we like to have this coping mechanism. So this coping mechanism gives us self-justification for our bad judgment, right? So it's saying, oh, it's okay, it's going to go back up and so forth, right? We give ourselves an understanding and a period of basically like not living in integrity, right? You're not living in your own psyche, you're living out of fear, right? So this fear, right, causes price to drop. So fear, price drop, right? So fear causes price to drop, always has, always will, right? So once this fear drops price, it basically is going to turn to the downside, right? And what do we see? We see market price spike to the low to trap, once again, all of the people that were in this market price way too early, right? So what happens is that it shoots back up, right? It shoots back up, and this is where a lot of people, again, try to hit home runs, right? It's called FOMO, right? Fear of missing out. We've all heard of that, right? All hear that saying. It's all psychological, right? So the mental understanding of it, the mental correlations with this is that when you understand that the market is human emotion, right? Human motion, right? Human emotion, or emotion, sorry. Right? Human emotion. Market is human emotions. All this is, you guys, is frequency, right? Frequencies is essentially volatility. Frequency is the same thing, right? Frequency, right? When we talk about frequency, we're talking about volatility, and we're talking about market momentum. Because what happens when people are scared and they're feared, right? They get out of the market, right? So that's when people are dropping price. So for the fear psychology, right? This is the psychological aspect that they've been using. They've been studying this, you guys, before World War I, right? Before World War I, they've been studying this psychological methods on how to define the mind control of the human being to be able to live in this fight or flight stage, right? This fight or flight stage causes us to not react with reassurance and trust, right? We're just doing it because we want to be able to get money really quickly, or we don't want to live. We don't want to have disaster, right? We don't want to be desperate. So what happens is, you guys, is that when the market comes into this fear, and the human emotion starts to come into fruition, the market starts to drop, right? And then this is what happens, you guys. It goes all the way back down, right? Shorts all of this, excuse me, guys. Shorts all of the traders out of the market, right? Then once the market has finally valued to a point where people are giving up, they're over Bitcoin, right? That's when they buy the most out of the bunch, right? Because they're going to trap all of the big institutional traders, right? They're going to get all of the small people out of the market, right? That's why they put it on the market exchange. That's why they put it on the public market, right? They're going to get everybody that's essentially not used to the psychological aspects to it, and they're going to define price. And then once we have one cycle, right, the treasury bonds, right, the dollar, right, the inflated, basically Ponzi currency that we all use on the daily basis, right, is overvalued, meaning that there's no value in it at all, right? This inflation is too high. They're going to have to correct it and use another investment wheel, another cycle, right? So that's what gives them time, right, to invest enough money into Bitcoin. So we're going to see a huge spike in Bitcoin to the high. I don't essentially want to say we're going to see market price go higher than 5,000 at this point, because I'd be kidding you guys. But what I do see is price is going to be understanding different things. So thanks you so much. I appreciate it, Jana. So what I see is that price is going to be moving to the upside, right? To that 5,000 level, right? The reason why I want to see that 5,000 level is because where is price? If the dollar is going out, people need to make money, especially fund managers, people that have investment wheels, right? They're going to have to still make money for their investors. So if we're going to see a drop in the US dollar right now, if we're going to see complete correction, right? That 7-year correction, when I talked about a lot with you guys, and I'll have that as well available on the Discord once again. That 7-year cycle is when the market comes into a distributions phase, right? Then the market goes to a markdown phase. We're going to start to see that drop to the downside and even completely shut down, maybe even hit spikes to that, 800 moving average, right? Because we use this 800 moving average as a 2-year interval, right? Because the market likes to test these 2-year intervals. And the reason why I'm very confident on the way that market price is going now, you guys, is because a deficit, and if you guys understand that a deficit, right, $1 trillion deficit is a stimulation process, right? Obviously, this is the stimulation process of 2007, 2008, right, when you had the subprime loan crash and all other fraudulent activity the banks and institutions made, right? They put money into the market, right? They stimulated the economy. But when the market is not able to stimulate itself, meaning that it's not going to be able to provide for itself, it's not working on its own, right? It's just like having a kid that's been you're enabling him his whole life. He's not able to learn from his mistakes. He's not able to grow, right? Because if you think about it, it's the same thing. Human behavior is the same thing as market material, right? Market momentum. It's all human aspects, right? So the thing about history is that we over and over again don't learn from our mistakes. We go up into this super high level, right? A non-realistic standard of living, right? We're in the lowest unemployment, and I understand, I thank Donald Trump for all the amazing stuff, because essentially Donald Trump is one of the people that is actually telling the truth with a lot of this stuff, and I know a lot of people have different, controversies with him, and I'm not really into politics, but when I want to say something about him is that he tells the truth with a lot of this stuff. He does lie just like all the other politicians. You can't trust a word they're saying, but what I'm saying is that some of these things that he is saying are actually true. Like a lot of these things where we're talking about global warming and all these other elements were in the past, we had a lot of politicians just straight up lie to our face, but then they were they trust, they look trustworthy, right? So you might not like him, and sometimes I don't like him, but the thing is that he's not going to be so sketchy, and he's not going to be so manipulative in your face all the time. He's going to actually tell you somewhat of the truth. So I'm not going to give him the benefit of the doubt, but I will say I like someone that's brutally honest, even if they are someone of horrible morals. At least he stands by them. He's not going to say something and then completely go. I mean, he does do that sometimes, but you guys know what I'm saying. He's looking to show the truth than just show you guys sugarcoated stuff that we've had from president to president to president to president. Every single time someone has said something and then never follow their word. Their word literally was meaningless because they literally never do what they say they're going to do. So that causes a lot of people to keep completely going into a frame of not having reassurance, right? Someone keeps on telling you every single day, oh, I'm going to do this, I'm going to do this for you, and then never does it, right? You're going to stop believing in them. And we've seen that with politicians over and over and over again all the time. So it's really completely astonishing that we need that value from these politicians and these hedge funds and these institutional banks to tell us what we're doing. No, we need to take this in our own hands and be able to provide this for ourselves. So we are completely relating to what I recently read in the book I completed about market psychology. I want to know about that book, Justin, because maybe we've read the same book, and a lot of this stuff, you guys. So going more into it. I want to talk more so about price. So if you guys have any questions about where price is going to be, I'm going to be able to answer the questions while I go with this. So that being said, I'm going to just talk about the continuation and the crosshairs of where price is going to be going. So I made this analysis, you guys, actually last year, and I made this in my book for my management, for my investors and management fund. So what I wanted to do is see this come into fruition. And I thought it was going to come into fruition last year, but then now that it's coming into fruition this year, it makes everything so exciting, because like to know that like when you are able to intertwine something, right, and understand the markets, right, and to see it come into fruition, it's like a liberating feeling, right, because you're like, okay, now I'm understanding market psychology, human psychology, right? So like when we're talking about this energetically, right, because emotions, right, is energy in motion, right, E equals mc squared, energy, right, matter squared. We're just looking at this from a psychological aspect. Completely the same relevance of what the market play is doing now is what we do is called a divergence, right? A divergence is what the media does with structures of intellectuals that want to be able to not show the truth, right? What they do is that they will give you something, right, and provide you nonsense to stir you away from whatever is truthful, right? Like, you know how we'll have like huge news events or huge like I don't know, like we'll have big like breaking out of like tariff agreements, or like war with North Korea or something, and then like the Federal Reserve will like slip something in like a crazy like an agreement like without anybody knowing. It's because it's divergence. They don't want you to understand the truth. They want to give you a little bit, right, but not give you enough to be able to be prosperous and live a prosperous life. So like we have to find that out ourselves. That's the most important thing. So like when we're looking at this from a psychological aspect, and we're using these determining factors, right, we can be able to define this and be able to make a lot of capital, right? So what are we looking for gold, knowing that the dollar is going higher, right? And I'm looking at the daily, right? So if I'm telling you, if I were to take this, and this is the 800 moving average, right? This is a huge indicator of a bullish breakout to the upside, right? Because look at 800 moving average crosses 200 moving average. And this is a huge market. So yeah, Master the Market Psychology, Howard S. Marcus. Yeah, I've read that. Definitely, I definitely read that book. Really, really great book. I do recommend. Actually, I just picked up this book the other day. But it is talking about neurolinguistics and neuroscience as well. But it integrates with trading as well. It's a huge. I'll put it in the Discord after this as well. They give you paved for narrative. Exactly. So teach us about the 800 moving average for every 2 years. Oh yeah. So what I like to see is that this 800 moving average is essentially what ECNs and market makers use. Okay. So ECN is electronic connecting network, right? And an ECB is electronic connecting broker. So they make the interbank market, right? The interbank market is ran by 92% of the banks and institutions in the world, right? HSBC, Citibank, Deutsche Bank, and so forth, right? Berkeley, everything, right? JP Morgan, and so forth. What they use is that these moving averages are just an integration of previous market activity that is able to provide you with further, right, market momentum. So what I use this 800 moving average for is because this 800 moving average is always a pinnacle touch and resistance before a huge market reversal to the upside or downside. So if we can see how the moving average comes from this bearish trend, obviously, to it scoops up price and it works a little below price, making this liquidity trap. So we can see all the liquidity traps, right? All the false breakouts to the downside to trap all these traders that were trying to go short, right? To reach these previous lows, right? We have one here. We have one here, right? We have one here, and we have another here, right? These are all trapping liquidity into a position, so they're going to make money off the buyers, right? Off the sellers, excuse me, in this market. So this is called gold spot. So moving into this, the reason why I use this moving average integration is because the moving average from the 800 shows always a high probability of a trend formulating, right? So this is just basically a range consolidation from this area, right? From this area and down. So this area right here is a range consolidation. So we're going to break out of this area soon enough, right? We're going to break out of this area and we're already at that area, right? Showing basically it's going to break out of it. That's why I wanted to take our take profit at 1375. If you guys saw the Discord, we have that profit, right? 1375, and we got in at 309. You guys, we got in at 309, okay? 309.88. 1375 was our take profit. As of right now, we're still validating as this is a nice bullish trend. There's no sign of resistance. Yeah, this is a false break high, but we can already tell by using the hedging integration, right, that market price is going to break out of that resistance, even go higher, because treasury bonds are going to go shorter, which means dollar is going to get weaker, which means more money is going to be put into gold, right? It's just how the market and this human psychology works. We always look for a safe haven, right? We're trying to be like Switzerland. So like that is the integration process that I use when I'm using these faculties to invest into different vehicles, right? So this is just obviously a way that I'm able to see break support and resistance as well. So hopefully that answers your question when it comes into it. So excuse me. So the 800 cross what other moving average? So 800 moving average. So that's basically it. That's like the one that I use every like 2 years, especially in times like this. But you know, I use the 200 moving average, the 50 moving average, and if I'm scalping, like if I'm doing like 20, 30 pip scalps, I'm using the 30 moving average because I want to see bounce and correlation reflects off that. So if I go like to the 15-minute chart right now, I'm not going to use the treasury bond because that's evidently not something I want to use. I don't trade the 10-year on scalping. That's just insane. The drawdown or just the margin itself is crazy. So for instance, so let me show you guys what this is. So let me go back into the template. Let me go into the indicators. Oh yeah, you can also set alerts, you guys. So like something else is that you can set alerts. So if the market bounces off this moving average, and if you guys are a moving average, exponential moving average breakout trader or whatever, if you guys use the moving average to make your trends, you can just set an alert, right? This alert will basically say alert to add TSMA, right? So trading alert, basically if it bounces or touches these 50 moving average, you'll get an alert to like your phone if you use Trader's Way, or if you use TradingView or whatever, it will make that alert. So if it bounces, you'll be able to take that trade, right? This is basically a simple methodology that actually I found from one of my mentors, is that the moving average bounce is essentially, it's good for most of the time. And all you're waiting for is price to touch the 200 moving average or the 100 moving average, the 50 moving average on a trend, and you're waiting for it to hit that bounce to buy or sell, right? So essentially that's like the angular resistance or support, and like it's pretty simple. It's a pretty simple way to trade. I use that sparingly because it's not always that time. It's always not always that easy, but I do use it sometimes, especially if I'm already on a trend. So like for instance, so how I use it when I'm scalping, right? So say that I'm scalping and I'm in position, right? I'm not going to scalp right now because I'm already, at 12 o'clock, meaning it's New York session. New York session, it's already, the moves have already been made, right? If I already took a couple positions, London session today, so I'm not going to be looking to get into the market, right? Until I see Tokyo session come into consolidation, right? We have to use these faculties also to trade. So when we're seeing these positions, right, we see that break to the downside, right? What does the market like to do? The market likes to break and retest and work off daily and weekly highs. So I'm going to show you guys market structure, right? Market structure is pretty simple. So I can't spell today. Sorry, I'm spelling you guys. So market structure, right? Work off week, high and low, day high and low. Okay, so this is how the market works. So and this is essentially, and then I'll show you guys exactly what this means on a, I'm gonna blow your guys' mind something. I'm gonna blow your guys' mind right now on this thing. It's called market disaster phase formation. All right, so this is something called the market disaster phase formation, right? And I'm gonna show you how it works, okay? So this is basically the market structure for the day. All right. So essentially, we're going to look for the beginning of the trend of this day, right? We're going to come to, all right, so this is the 4th, right? This is the 5th of February. If we're going, this is psychological, this is the thing, I'm going to show you guys exactly how this works, right? So this is the beginning of the week, right? This is the beginning of the week. We're trading, right? Low volatility. We have that spike high, right? Or the consolidation to trap liquidity, right? We have the trap liquidity. They're going to spike price down, right? They're going to make this a disaster phase, right? This is where everybody gets all, they're like, oh my God, the market's moving into a direction. Let's everybody short the market, right? Disaster phase. So this is the disaster phase. So what they use is this for a formulation for market price is that after they hit the low, oh my gosh, can't spell it at all. So after they hit low, they hit high, right? Reason being is that market price, market makers, right, liquidity providers, they always know that market is going to go from down. They're going to shoot you down. They're going to hit you up, right? Think of a heartbeat, you guys. Think of a heartbeat, right? Your heartbeat, right, is all integration, you guys. The electromagnetic frequencies that the heart provides is the same market rhythm or the same frequency, volatility frequency that the market is played on, right? The human integration of anatomy is the same as the financial market integration. They're the same thing. So what does heartbeat go? It goes right up, down, comes back, right? Up, down, comes back, right? So let's just map that out now. So market comes up, right? Goes neutral, down, and comes up, comes back, right? So this is called a market structure. And this is what the market will always work on. The highs and the lows of the days and the weeks, because that's where the most liquidity is trapped in, right? So I'm going to go into that and I'm going to have more diaphragms to show you guys more of that, because I learned this from a magnificent trader actually on YouTube. So I'm going to pay respect when respect is due. But I want to show you guys how this works and integrates on the daily, so you guys can make maximum profit by scalping, right? Because when you know that price is going to work off the highs and lows, and using psychological numbers, right, the 000, the 250, the 750, the 500, then we know that price is bound to hit these levels. And then if we use ADR, right, average daily range, if we find the average daily range, we'll know we can master the algorithm, you guys. We can master the algorithm that the market is played on. So I'm going to map it out for you guys and show you guys exactly the things that you need to master the market algorithm and like be able to make profit hand over fist, to be able to make trades, right, over and over and over again, right trades. So this is the market market phase. I'm actually gonna drink a little water, you guys. A little parched. So the market phase is essentially market phase structure, right? So I keep on saying structure wrong. So what we're going to see is this: high, low, day, week, month. That's simple. Work off high and low. Then we're going to see this: market formation, disaster phase, recover phase. Then we're going to see this: market M and W formations, right? And then work off lows. Okay, I already mapped that out. Okay, so all right, psychological numbers. Excuse me, psychological numbers. So psych. Actually, oops, spelled that wrong. Psychological numbers. 000, 250, 500, 750. Okay, so this is how you master the algorithm of the market, right? The market works in these specific integrations, and I'll show you guys exactly what this means. Thank you guys so much. I appreciate it. Let me show you guys how this works. So this is the high, right? We're going to call this, I'm going to show you how it's mapped out, right? So this is the high of the week. Or no, high of the day, excuse me. This is high of the day, right? High of the day, this is Monday. Yeah, Monday. I'm going to talk about lunar cycles in another video because I don't want to like complicate this. So I'm just going to talk about the basic market algorithm structure basic structure that basically defines the algorithm, right? So any algorithm is essentially based off the same reproducing structure of the human anatomy, right? It's just to be able to survive, right? So the surviving attribute is be able to do things at a repetitive basis. So it's be able to make a methodology, and this methodology will eventually then be able to correlate in structure and work on its own, right? Just like our cells work on reproducing our body, how our blood and our organs are able to basically cleanse the blood and obviously refresh the new blood, how we're able to get oxygen in without us even thinking of it, right? This is called the subconscious mind, right? So the subconscious mind is essentially an algorithm that we can tap into, right? So the same thing is integrated to the markets. So what happens is that the high of the day, which is Monday, that's what the market's going to work off, right? I'll show you guys how it's going to work off. So market high, right? And we're going to also put, and guess what, you guys? We're going to look where price is going to be at psychologically, right? So I bet you anything this is going to be a psychological number as well. So let's map this out together. This is at basically, yes, a psychological level. It's between 13,750, right? And 1315, right? So we're just going to basically say that it's right at that 1317, right? Flat, right? So that's a psychological level. Market breaks down, right? Uses these intervals, right? We're going to use these intervals all the time, these 250 intervals, but on we're doing spot goals, it's a little different. I'll show you guys on obviously a currency pair, but we're going to use it by using basic $10 or $10 intervals, right? So we'll see from the high and the low. So price is going to be coming from, let's break it down. So let's go from another psychological level, right? We're going to map that out. So this is what's going to happen. Price breaks down, and what's it going to do? It's going to make a low, right? Make a low of the week. And this is using a scalping method. This is using an intraday trading strategy, guys. This is a day trader strategy. If you guys are knowing what kind of strategy this is, day trader strategy, 15-minute chart day trading strategy. So, right, low of the day week, right? So now we know where the market's range is going to be, right? Then we can also go to forex.com or anything else to know the ADR, right? ADR is average daily range. So you guys know what ADR is. So you can use this essentially to maximize where to enter the trades, because if you know the average daily range, you know how high the market and how low the market will work, right? So this is average daily range. So now that we have the average daily range, we have the high and the low, we're going to know how the market's going to work, right? It's going to bounce off each other, okay? So we're going to actually move this a little lower, and we're going to use it at that low and high, right? So this is how it works. Markets, and I hope you guys are with me at this time. So thanks, I really appreciate you guys. I really appreciate all the amazing comments you guys leave me. It just makes me want to work harder. So this is the high of the week, high of the day, right? The low of the week, low of the day, right? Essentially, we didn't know this, but now we know. We're looking at this as a back testing method, but I'll show you guys how easily it's able to be found with trend or trading at the moment without even pre-market material as well. I'm just showing you guys how the specifics of this works. So then the low of the day bounces off, makes that, right, peak formation that we talked about in previous videos, right? And then what we also see is that market price is making that consolidation, what we call a flag pattern. This is a flag pattern building liquidity, right? And what do we see before that liquidity is a market stop hunt, right? We talked about this before, trapping buyers and sellers before moving price up. So what do they do is that they spike price high, then they trap those sellers, right? And then what they did is they moved back up into that zone, built up enough selling pressure, right? Because they basically think price is going to drop back down. But as we know, what does the algorithm like to do? It likes to work off the daily highs and lows, the weekly highs and lows. So we're going to go long because we know that the average market price is going to probably bounce back to that high, right? So we take that long position, and then what does price do again, you guys? It hits the low, right? Works off the highs and the lows of the week. So what do we see again? Works off price once again, tries to hit the high, consolidates, and then a market stop hunt, right? We see a liquidity trap, right? Just like we see in all the other trades and all the other positions, right? The market makers are trying to trap buyers just as much as they are trying to trap sellers, right? It's just the reverse of it. So they're going to trap those sellers, or excuse me, trap the buyers at this time, and then they're going to drop price. And what are they going to do once again, you guys, the next week? They're going to work off the low of that previous week. It's not, I'm telling you guys, over and over and over again. They do this every single week, over and over again. This is like, and this is why I'm saying that you can read all the technical analysis books, but if you don't know market structure and the market algorithm, it's impossible to be a full-time trader. It's impossible to trade full-time and to be able to make profit inside and out. You have to know these formulations, because when you get caught up in a trade, especially with trades that are like huge and spikes, psychologically you have to be ready for it, right? You have to be ready to go to war, basically, because you can't be filled up with cortisone and be filled up, because they will trap you psychologically. That's why they make these factors. That's why the algorithm is set to survive. It's set to make the bankers money, not us money. Make the bankers money to survive. So what are they going to do? They're going to reverse engineer our psychological patterns, right? Our fight or flight, right? Our faculties that we don't like, right? So then they can make profit off that. Because when fear is in the body, you make decisions that are not correlated with your inner self, right? So that's why when I talk about psychological is 90% of all of trading. You can be the best quantum physicist, you know, and have the best algorithm, right? But if you don't have determining factor of market psychology, it's impossible to stay profitable for a very long time. So going into it even more. So this is how it works, okay? So we can use this, and now we can map it out from a bigger perspective, right? So hits the low, hits the high, right? Spikes the high, hits back to the low, traps the sellers, hits the high one more time, traps through liquidity once again, right? Trapping that liquidity, and then stopping out those higher, all those. That's why I'm not a breakout trader, you guys. You hear about those people like, oh, I'm a breakout trader. You're a breakout trader. Why are you a breakout trader? The average daily range is integrated, so there aren't any breakout traders. Average daily range is the defined method, right? That when you have a breakout, it's a polarity, right? What goes up must come down. There's always an other thing. So when you take that breakout, unless that you're looking only for 5 to 10 pips, and if you have, you know, $400,000 account, you know, and you're doing, you know, heavy lot sizes, of course, that's easy, right? But if you're like the average person, you know, that doesn't have that much money, right? You're not going to be able to take 20 or 30 pips and live off that every single, essentially you're not going to be able to live off that, right? So you have to be able to find the lows and the highs of the day, right? To define where price is going to go, because then you can make a lot more. You can make 80 pips or 90 pips, right? So this will be able to, you know, be able to show you how this can formulate to be able to maximize your profits. So what we want to use now is formations. So these formations are W and M formations. So if we're going into price right here, you guys, so I want to actually, without, so I'm going to remove just a couple of things. So remove this. So if you guys don't see right here, this is a W formation, right? So I'm going to actually just map it out with a trend, right? So I can see it, right? So W hits the low, hits the low, hits the high, and hits the low once again, right? W formation formulated, right? So now we know that that's a buy, right? Because that's the second leg of a W. We take that long position. We got lucky because price literally broke out, right, during Tokyo session, made that high, trapped those buyers, right? We got out at previous high, right? And we make that huge run, and then now we know price is probably going to retest the bottom. So what do? We take a short position once again, and then we short price. We got lucky once again. Prices dropped automatically, and then we take that low, okay? And then what does price do once again? It makes another W formation, right? Before price moves higher, right? So that's why this essentially is the market formulation of the structure of, this is the structure of the market. Works out the high and lows of the days, weeks, and month. Works, does a disaster phase, which I'll go into tomorrow, right? Or I'll try to go on tomorrow. And then M and W formations, and then psychological numbers, which we'll talk about on the Great Britain pound chart tomorrow. And this is how I'm able to map out, you guys, these highly profitable trades in our Discord. I use these same methods over and over and over again to make 120 pips, 140 pips, 180 pips, 260 pips, right? 250 pips, right? This is how I use this to give you guys and execute you guys the strategies that I'm basically trying to show you guys that it's essentially it works, right? So going back into it. So like when I see, I'm going to answer a couple of questions before I do this. So downloading this video after streaming this informative goal. Hey, thanks, man. I really appreciate that. Really do. So when we see the market price go at the lows, right? Break the lows. And then guess what, you guys? Shoots out and then makes a new level. So what do we see? We go into the hourly chart. So now the hourly chart is going to formulate price into a different way. So we're going to see it from an hourly perspective. I'm going to move this stuff down a little bit. And I got about 20 more minutes, you guys, before I have to leave. But I'm going to, hopefully you guys are getting a lot of this. So this is basically a consolidation area. So this is how you trade consolidation, basically, you guys. And you guys know that market price, right, it consolidates 50% of the time and trends 50% of the time, right? So there's a 50-50 method in the market. So there's all you need to know, you guys, is market structure, right? Market S, right? That's everything. Market structure. If you know market structure, you'll be able to make as much money as possible trading in the markets. If you don't know market structure, it's hard because you're not gonna, it's based down to psychology. If you don't know something, you're feared of it. That's what ignorance is, right? So that's what racism is, right? Fear is false evidence appearing real. It's your false vision of it appearing as reality in your psyche, in your mind, right? In your conscious reality. So when you are feared because of not being educated, you are living an illusion, right? You're not living in consistent of knowing and trust in yourself. You're living out of basically fear, right? Fear is false evidence appearing real, and then that's what causes people to gamble. There's a 90-90-90 rule, you guys. 90% of traders lose 90% of their accounts in 90 days. I was one of them when I first started trading, right? Blew my account in 90 days. Thought I was gonna be a baller, right? Started doing all these crazy trades, made a bunch of money, but obviously I lost it all at the end of the day, right? 90-90, right? So that being said, why do people lose 90 accounts? Why is it that there's not a lot of day traders? Why is there not a lot of people that can trade? It's because they can't break that pattern of fear. And there's a lot of other things to it, but it's mostly just basing that because people have an attachment to money that essentially breaks all things, right? Everybody has an attachment to money, right? So if they don't break that attachment to money or losing money, and they don't know the structures behind the market as well, how are you going to be able to provide and be a profitable trader, right? So now that you guys know this, think about all the people that say that they're day traders and say that they're trading all the time. Think about that, and then think about the lifestyle they live, right? Because it doesn't matter what people say; it's the actions that they produce will show you the results, right? So that is what matters. That's what shows a lot of the people out there, right? They're like, oh, check my trading style, make a bunch of money. You know, that's great and all if you made money in 1 year, but we're trying to do this for the rest of our lives, right? I'm trying to do this, as long as I can possibly. I'm trying to trade as long as I can possibly, without having to go back. So yeah, blowing 2000, yeah, definitely. So what time frame are you charting for this example? This is the 15-minute chart. So all of the market structures and the market highs and lows is based off that 15-minute chart. I use the hourly chart, right, to formulate if price is in that consolidation or if it's in a trend phase, right? Because you can't really tell if market is in a trend or in consolidation if you're on the 15-minute chart. It's too small, right? You have to broaden the horizon. So you go to the hourly chart, right? And if you're a swing trader, you can look at the 4-hour chart, right? If you're doing longer term investments, right? And the daily, if you're just a carry trader or if you like to hold your positions for longer periods of time. It's essentially how the market works. So we can see that now this is the 800 moving average. So we're definitely in a bullish long, we're in a long position, right? So this is, I want to show you guys something later on, probably tomorrow. It's just, I did a spreadsheet on diversified allocations of investing, right? I'm also doing, so if you guys don't know, I do fund management. I also manage capital for my clients as well. So I trade, I'm a trader, but I also do financial management as well. So that's mostly where a lot of the stuff I learned this from, right? From a lot of my mentors was basically how to understand this elements and structures and knowing how to allocate portfolios and to be able to understand, because you know, a lot of people don't know how to manage their own money, which is essentially you know, a thing that keeps people in fear, right? And they in stigma of the illusion. So if people become prosperous, now they have the time to read books. Now they have the time to think outside the box, right? A lot of people just don't have the time because they're always working and they're so tired when they get off work that they don't want to learn about human psychology or my bad, or the bad I do in life or the good I do in life, right? I want to pay the bills, I want to watch a game, I want to drink beer, I want to do sports, right? But there's way more in life than just those simple mediocre you know, structures. And if that's you, I'm not trying to hate on you or anything, and I apologize if I come out that way, but life definitely has more to offer for us, but we have to take it in our own hands, right? And really break down, right? So break down our own life structure. So that is basically it, you guys. But I appreciate you being on today's live stream. I will be up tomorrow. I want to talk about the lunar cycle, right? The lunar cycle and market cycles and how structures are correlated through the moon cycles, through electromagnetic frequencies. I want to talk about also diversification, allocations in different portfolios, right? So if you guys aren't just speculation investors, because essentially if you're trading currencies, option or trading marginal, right? Marginal trades are speculation investors. So so how did I meet my mentors? So I met my mentors through actually my mother. So I actually met a lot of my mentors through my mom. She did really well in real estate. She's very educated herself. She's made you know, a very, very good living for herself. And she was very determined, and like because I had that, I was able to learn from them. And actually I met my trading mentor from networking, right? I just was going to seminars, I was spending books, I was spending thousands of dollars, you guys, and just reading and researching and understanding the life, right? I wanted to become the best I can be personally, right? So I was just doing the best I could. And then, you know, the law of attraction, right? What you produce, what you think will come to reality, always does. So what you believe. So my belief was right. I want to have a prosperous life. I want to be able to travel. I want to be able to live, you know, a vacation. I want to help people and so forth. So what happened was that I met this guy who was a proprietary investor for Citibank, right? And he sat down with me and we used to have coffee, and he taught me about all these psychological methods. And he told me to read books. He told me to read, you know, Earl Nightingale. He told me to read Bob Proctor. He told me to read, you know, my mom also, you know, sorry, like I'm blanking on names right now, but you know, this essentially I learned more so about personal development than I did about finance, because when you learn about yourself, it all correlates to how finance works. So like I really just basically broke down how that worked. And then after I did that, you know, through trial and error at that point, through trial and error, like me losing money, then gaining money, losing money, gaining, and then finally I plateaued to where I was more gaining money than losing money at that time. And yeah, that's how I met my mentors. Basically, just networking and going out there, getting out of your comfort zone. You know, just if you really want it, you'll do it. Like, you know, if the doctor said you had a month to live, right? You have a cancer that's non-curable. What are you gonna do? You're not gonna be doing the same thing you're doing today. You're gonna be out there hustling, traveling, doing whatever you can to do, right? But why do we have to always have this disaster in our lives to live this life of prosperity, or to have that motivation? We shouldn't have that. We should have that internally because we want that for ourselves. So I think that's the biggest thing on how a lot of people are able to thrive, you know, by just having that inner, like, I want it so bad, like, let me just, you know, do what it takes to get there. And eventually you will, you know, just through trial and error. That's all I can say, trial and error, you know. So that's how I met my mentors. So but yeah, so I want to talk more so about the mentor, or not mentorship, this lunar cycles tomorrow, how market makers, because I want to show you guys that this happened during the lunar cycle. This right here is the lunar cycle right here. What we had, what? So if we go into what we had, new moon cycle. And I'm like all into like harmonics and like chakras and stuff like that as well. I know it's kind of voodoo stuff, but like I'll show you guys how it works. So we had the 2000, and then we had February, right? So we had the 2000 on the 4th, right? And then we had the full moon on the 19th, today, right? Today's the full moon, right? So what happened on the lunar cycle, right? So we go into market lunar cycles and we see how price has moved since then. So new moon, the 4th, right? Then we have then today we have the full moon, right? Which essentially yesterday was the full moon too, and so forth. So we're going to put that into integration of price, all right? So this was the 4th, right? Lunar cycle new moon, right? Lunar cycle, and then now all price did was reverse, right? From bearish to bullish, but it waited for that new moon, right? The 4th, right? New moon to formulate that lunar reversal, right? Because then now the price is going to reverse through the lunar cycle. So I'm not making this stuff up, you guys. Like I'll do this more over and over. I'll show you like 1,000 different equations to this, but it really does work. Like this stuff is essentially a lot of the same thing. Where do you see Jugna going? JNUG. I don't know what that is, to be honest. So JNUG. Can you type that in the comments of what exactly that is? I'm sorry, maybe I'm not, my brain's not calculating what exactly that is right now. So yeah, so these are definitely formulations of price. So like, for instance, like I'm gonna show you guys exactly what happens. So before I go off, I want to show you guys how this exactly, how I formulate a price. So this is the market health update, right? So I'm going into our Discord. If you guys aren't a part of Traders Profit Club, please do become. So look how accurate my formulations were, you guys, on these different market shares, right? So I'm going to go up to here and I'm going to put them up, right? So this was our first trade, right? I don't know why it's taking so long to load right now, you guys. Oh, gold. Okay, yeah, gold. So gold. So you guys see how I mapped this out? I said lunar cycle market reversal. You see how I said that? Lunar cycle market reversal, right? Just like I talked about. You see how this is before market price obviously was predicted, right? This is before price was even established, right? I said possible breakout to upside. First level, second level, previous retest of January 7th, right? Market consolidation, flag pattern, bullish breakout. What does it do, you guys? Exactly that, right? Executed perfectly, right? So if you would have took that, if you guys would have been on that market analysis, you would have been obviously profitable in that 100% with zero drawdown, okay? So going back into it, the second one, right? Same thing. Sorry, I don't know why it's so laggy in here. Probably because I just have some thing running, right? Same thing, guys. Market lunar cycle, right? Well, basically I said the same thing. Bitcoin, Ethereum follows Bitcoin. So market consolidation, bullish breakout, consolidation, right? Moving average crossover, same thing, guys. Boom, perfect, right? These formulations I'm talking about, you guys, work, right? So they're like essentially the same thing that I did feel. Lunar cycles are fascinating. Looking forward to learning more. Was skeptic, but after researching, it really does have. Yeah, man. So like a lot of people definitely are like skeptical of lunar cycles for sure. They're like, what? They're crazy. But I'm telling you, man, it's really, really cool. Who are you? Trading view, name or tag? So I'm on Traders Profit Club. Traders Profit Club is our tag for all these. I put these up published. So Bitcoin technical analysis. Sorry, I didn't mean to not answer your question. So what I believe that market price is going to be going for gold is up to 1375, right? So 1375 is our determining factor for our end position on for trading that. So that's why, because as you can see, treasury bonds, right? So what I look for is I look at 10-year treasury bonds, which is an integration of dollar, right? It's going to come down, spike to the downside, test that 2.5. If we calculate that, I'm not going to really go into math right now because I can't. But if we were to calculate that, that still gives us at least another $40. So I want to see market price hit that 1375, right? Because right now we're at that first support level or resistance level. And if we see that second resistance level at 1350. So right now for sure, I can say that market price is going to go to 1350. But and I won't get in right now. I'll wait for a drawback because right now you will have a drawdown. But coming into this, I want to see market price hit to 1375, and then obviously, if we're going into like more so, we can even see price even obviously test and even go higher. But we're not going to look that far, guys, because that's just too confusing. And then we have to take into consideration fundamental data, because when you're looking for long-term investments, you have to take into fundamental data. You got to do your research. You got to do, you know, Federal Reserve. You got to look at research of banks and institutional faculties and understanding those aspects of it, because then that will give you a determining aspect. But if you're looking for an intraday trading style, you don't have to look at any fundamental data. You know, don't trade non-farm payroll if you don't know what you're doing. Don't trade, you know, obviously when big rates come out, but just be very cautious and do your due diligence, and you will be okay. You'll be fine. So yeah, so really exciting stuff, you guys. Really great stream today. Thank you guys for all the amazing questions, all the ideas. Thanks for all the support. I really appreciate you guys. And I'm gonna be on the Discord. I'm actually gonna be doing a journey. Okay, so I'm gonna be opening up an account that I'm gonna be actually trading with you guys. I'm gonna take this journey. I'm gonna try to take this account, and I'm gonna show you guys. You know, obviously, I'm going to show you the proof of the account, everything like that. And I'm actually going to take this journey with you guys through. I'm trying to. I just set it up as of today, so I'm going to fund it definitely by the end of this week. So I want to show you guys that, you know, you can even take a small account and make it even huge. Okay, so I'm going to show you guys that personally, live streams, screenshots, showing you guys the whole works and everything like that. So, you know, maybe that will help you guys, you know, get the confidence you need to be, you know, you can do this, you know. So I'm going to have that available to you guys definitely by the end of this month, because I want to start the March through, it's basically, I'm going to try to do it through March through May, right? I'm going to take that account, I'm going to trade it until May to see how far I take it, right? So yeah, so it's going to be really fun, you guys. It's going to be a journey for all of us. And yeah, I hope you guys have a great rest of your day. Study a little bit the markets. If you guys need any help, please reach out to me on the Discord. I have a meeting, but I'll be available after 2 o'clock. And I hope you guys enjoyed today's stream. Have a good one. This is Brento Traders Profit Club. Take care.